Recording's on. This is Frank, Clueless 8. Today is September 17th, the day of one of the most critical Fed meetings that we have gone through. And hey, VIPS, are you in? Okay. And it's September 17, 2015. I wanted to do a quick, but to the point market update, so people are a little less confused and hopefully have their heads on straight to do what needs to be done in the days coming ahead of us and in the months coming ahead of us, okay, going into the end of the year. So let me start off by saying that this is not a market that an average retail trader or an average or even a pro trader can manage or control. This is the reason, and I'm going to plug in my service right now. This is the reason why I believe that my constant efforts in trying to decipher the message of the markets and putting my spin on it and trying to keep a level head about everything should and has benefited a tremendous amount of people. And being in constant engagement with you guys and girls on a daily basis is it should be hugely beneficial, rather than just simply getting an end of the day report or popping in once or twice a day to give you a canned line about the market. That is generally what other services do. Is not my idea of helping, educating, and benefiting traders. That's my mission statement, period. Now, saying all that, the markets are not linear beings. People who have known me, Scott has known me for a bit now, and other people, that being flexible, being adaptable, and being adaptive, I should say, and respecting what the markets are trying to tell us is an extremely complicated game. If anyone thinks that they can just get a timing service which tells them buy here and then hold it and sell there and all that stuff that a lot of the other services and trading subscription things talk about, well, I think they're just being idiotic, because the reality of the thing is that even despite this extremely volatile market, that many pro traders, and I'm in touch with many of them, I was in the business, have basically just sat back. They can't do it. Okay, everybody's waiting for that perfect moment where they think they can get in there and short the market or go long the market and make money. It doesn't work like that. This is a market where you have to engage and you have to learn from it. Engagement is learning. I never disengage from the market. There are days which I feel like saying, guys, no trades, just sit and watch. Then what? Then, it's just a matter of coming back the next day and saying, okay, buy now. No, you have to be engaged. And the trick is, and this is the reason why I survived well. Thank God for that. And God bless the USA. And when I say that, it's not just a little, Donald Trump statement. I mean it. Is the fact that we have an opportunity to not just learn, but to benefit from the intense volatility that goes on. Oh, this is what I was saying. So the trick is that you have to play small. And what we have seen, because of the rapid swings in the market, up 160, down 60 today, for example, right? 220-point swing, back and forth, up, down. And it's been like this a lot. And it will be like this a lot more going forward. So if you think you can do this completely on your own, good luck. Unless you're really like sitting there in front of 12 monitors like I do. I love it. It's nice and warm. Winter's coming. I don't need a heater. And the fact is that then that's great. But if you think that you need somebody to be somewhat of a guide, through this windy road that we're climbing, okay, then this is it. So the trick is, again, to repeat, is to keep trades small, but to be engaged. Because even on many times when I want to test the waters, and that's the key word, scaling in. Don't have to scale in with 20 contracts or something, or buy 5,000 shares of a $40 play and it slips down to 35 for no other reason other than the fact that a big algo program hit the market and all of a sudden you're down 20K. All of a sudden you're down 2,000 bucks. Smaller traders down 200 bucks. But the fact is, keep it minimal. Buy 100 shares. Because what it does, as it does, and all of you guys are very successful in what you do, I'm sure. I know a lot of you personally. I've talked to them, talked to you guys, and you guys are smart. Guys know what you're doing, meaning in your own lives. When it comes to the market, I don't think that you guys are that well versed, but that's okay. When it comes to it is, if you stay engaged and you learn, like, okay, this is the way it goes, then if it pulls back, if that's still the primary trend, we're going to stick to it, and all blah blah blah, all the other stuff. All right, so that's key. Gotta be engaged. Buy a little bit so that you are connected with it, because there's a human behavioral aspect to everything that we do. If we are doing paper trading, which I'm sure some people do, I mean, not in the service, but other places, they think that they can really game the market. Paper trading is fine to get a introductory view. It's like sitting behind the car with your hands on the wheel and not driving, or you're driving in your own parking lot, okay, on your own, driveway, or your own parking lot in your community, or whatever the case may be. Great. How about getting on the real road? That's real trading. So you don't have to go out there and hit the gas at 90 miles an hour. You can just slowly move, and that's how you learn. So that is my philosophy of what I do. That's how I did it, and that's how I suggest other people do it. Keep in mind a couple of very important administrative points here. Very important because it helps all of you guys. Guys, you have to monitor, regardless of whether it's on an iPhone that's on a charger or whether it's your little Motorola phone from the 1980s. Well, in that case, please burn it. The thing is that you have to monitor some of the key aspects of my service, which is number one, the Twitter feed. Extremely important. Don't have time, just skim the headlines. Don't have time to read the articles, fine. Read the headlines. Read it some other time. If you're not a reader, what can I do? You want to help your trading thing, you got to read some of it. You don't have to read the whole thing, just scan through it. The trade alerts, extremely important. I have never stood by and guaranteed, well, there's no guarantees in life anyway, that I'm going to just get into a trade and just stick with it regardless of anything. Okay, it's coming close to my target, so I should what? Wait till I get that extra dollar? No. I put out some directives out there in the form of selling 40%, selling 60%, selling 80%. If you have one, well, sell it or hold it. I can't really, I don't control your books. I will never get into the fact, and that's the main reason why I don't run, just so you know. This is the difference between me and maybe some other services. I am not going to run a point-by-point bulletin on what trade I got in, what I got out. I will give directives. I have some very precision charts that are out there, very clear, very clear. Of course, the analysis of the charts, that you have to take one step forward, join the group coaching sessions and learn from it. Everybody who's done it, nobody's had a serious complaint about it, because they have learned how to take those baby steps towards understanding the charts, because my charts are giving a lot of messages out there. I make it as simple as possible by putting the arrows, the red lines, the green lines. In fact, this should be a green line, and green lines meaning, like, bullish targets, red lines are resistances or support levels. Simple stuff. Nothing that hard. Okay? And arrows and red arrows and things like that. So it really can't be any simpler than that. So despite all that, I still get inundated with questions from people. Well, what is it saying? Where do you think it's going? I mean, it's all there. So you have to make that effort. There's just no question about it, because my job is to maximize my knowledge and share it with you guys. So if I have to answer the most obvious questions, then obviously there, that just doesn't make any sense. I'm taking away the time from other people and putting in some other important stuff here. So that's key administrative stuff. You have to listen to the Periscope broadcast that I started doing since I got the new iPhone 6S, and those the big screen one is fantastic, and those are extremely helpful too, because they are telling you in real time what is going on. And I don't want to put like 20 of them out there. On a day like today, I didn't purposely put in like 5, 8, 10 Periscope broadcasts out there, because it's not going to serve any purpose. And so this is the trick again, how to really maximize what I'm doing. It's working for me. It's not that the P&L is always green every single day, but the weekly P&Ls are pretty damn good, and thank God for that. So the point is that you need to match the static charts, which are charts like this, with the Periscope videocast, with some of the comments I'm putting through, and mix in a little flavor of the banter back and forth that we have in the chat rooms. For people who are new, just remember one thing here. My service is a steep learning curve, because I'm not looking to grow this service into a monstrosity like, I'm not going to name names, where you're just a number in the middle of nothing. Yes, I certainly want to grow my service where we have a heck of a lot more members. That's the simple reason why I say ask for referrals. I don't go out advertise out there in every single forum out, with big banners. It'll always be an exclusive service. And I will be always the one who's going to be producing the content. It's not going to be some kid that I hire and he's going to just churn out things which are the most obvious garbage that most of the services out there are saying, which is true. So I'm always going to be the one held hostage to my own views and opinions that's out there, right or wrong. It's fine. I'm good with that. Okay, but you guys really have to take the step forward. And the one thing I've started doing over the last 2 months, and these are important, what I'm saying, while you guys are just glancing at the screens, trying to figure out what the hell all this is all about. That what the thing is that that the one of the things that I started doing about a month ago is putting out for free. Okay, and I do want to say for free a lot of very important webinars and video casts and stuff, especially on the advanced coaching side, so others can see what is going on. Now, some of you think that that's going to be a normal thing. It's not, because some people are paying for it, even though minimal amounts. My 5 group coaching sessions, I'm charging what? It's like $202 now. Used to be $135. It's a joke. Just because I'm in the mood to share things with people and get people going doesn't mean that I'm just gonna sit there and get paid less than your Mexican gardener. Now I really sound like Trump, but that's true. Okay, the guy who's like cutting your shrubs. Try to call your a plumber and see how much he charges you. So my point is, don't take advantage of me on that front. I'm saying this very seriously, because some of you are thinking that, oh yeah, he's just going to go ahead and just put this out, so I'm just going to keep on looking at that. So why the heck do I have to put in that minimal administrative cost? That's really what it is to do that. Well, don't bank on it. All right, I will put that out because it's also good marketing, but please, One of the things I don't do is take advantage of other people. So don't do that. So let's move on. Let me hit. So all that is very clear. Let me hit the technical part real quick. And I'm going to start off with something that I did in one of the video casts, which is look at the weekly perspective. Here is a weekly chart. So you have all of you guys know the path that you're going instead of freaking out of what happens over 15 minutes, 20 minutes, 25 minutes. I know it's hard to do. You know, volatility is not there to keep you calm. Volatility, algos, and HFT programs are there to make you nervous, make me nervous, make everybody nervous, make the idiots on CNBC and Bloomberg nervous. And the best minds in the world say the stupidest things because of volatility. So sometimes the way I look at it, and this is the strategy of my business, which I've done very well, over the years, is to keep things simple. And that's the reason why I don't get into the depths of knowing every mechanics of every option play and putting complicated strategies out there, because to me the end game is, where do you land up? I think all of you agree on that. Buy, and where do you sell? Are you short, and where do you cover? That's really what it is. So you got these guys getting paid $5 million a year to say that make the most stupidest forecasts on the markets, which are generally 90% wrong. And here you have somebody like me you're paying a pittance of 60, 80 bucks a month, who have been overall, people who've known me for a while know that very well, have been dead right on the market, both on the bullish side and on the pullback side recently, showing both scenarios and what's going on. So think for a minute, okay? But it's a game. The money management business is a game. I've been in the business. I know it. And I'll tell you, they know very little. All they know is AUM, assets under management. And there's nothing wrong with that. So if they can get you the Kool-Aid to put your assets under management, then the fees that come, whether or not they're performing or not performing, is big money. It's as simple as that. So do not rely on them while they're talking their books. And for people who are newbies, please understand what that means. Talking the books means you're talking what's going to benefit you. So when you're saying, oh yeah, bonds should, bond deals are going to come down and the Fed shouldn't do this or do that, or this stock should, you think they're just saying it because they like you? Wake up. I'm not saying that they're not smart. All I'm saying is they're saying that for an ulterior motive, and that is to make sure that their books, their trading books, or their investment portfolios, portfolios benefit, because they have a mass audience on the media. And that is the God honest truth. So wake up and please try to understand that. Now, it doesn't mean that you can't get serious information on the media, but just beware. We are all, and I'm guilty of that too, skewed and what should I say, emotionally affected by analyst upgrades and downgrades and all kinds of good stuff, right? We all are. That's natural. Goldman guy comes out, puts a buy on, whatever, on Shake Shack or Netflix, and like, wow, that's great. But keep in mind that the market wants to do things just on its own. So let me get back to it in a second. And this is a weekly chart, and try to see what's going on. This is a weekly. Okay, I didn't know the ice cream van was here. But let me get straight to. Okay, let me talk a little bit about what happened this week, for example. And this is a weekly chart, and there's nothing wrong with it. Really, there's nothing wrong with it. Look at the candles while I just give you a 5-minute my version of what's going on. Okay, so here we had that big correction. I talked about it, and I was right. There was big hedge fund blowups, oil and commodities, all these things. Some of them in the high yield side, primarily related to oil and energy sector. I did say that there was a sovereign fund out there, a couple of sovereign funds. Those are states and their own hedge funds, that they were in trouble. And then comes out the news on Business Insider about the Norwegian wealth fund, which had significant declines. We had a couple of big fund managers on our side, like what's his name, David Einhorn, Ackman, but David Einhorn specifically, who literally got blown out of their oil and energy bets. You wonder why they do what they do, but hey, it's okay. So so you had a confluence of things that happened at the same time. Fed rate tantrums, what the Fed is going to do. Oh my God, are they going to raise rates half a percentage point, quarter of a percentage point? Well, we'll all know what they did, and I'll explain that in a second. So you had a lot of that stuff going on, right? So the markets needed correction because we're going nuts. Every day you woke up, stocks were up 10 bucks a pop. I hate that type of scenario. I flourish best when we have these type of flash crashes. One of my best 2 weeks was before that because we were shorting to a tactical degree, and then of course after that. All right. And so the point is that saying that I always say that fear is not a trading strategy, I live by it. Not to mention that, hey, when you have a big position in something, and I try not to have really big positions in anything right now from a trading perspective, is obviously you're far more nervous, and you do the stupidest things by selling early or stopping out too fast and all kinds of stuff. So here is a weekly chart of the market. This is the E-minis, same thing, the market. So look at this channel. The acceleration channel starts off in November of 2000 I'm sorry, this is a weekly chart. So this is, yes, around, look at the date on the top right here, okay, for people who would think or swim, that reminds me of something very, very important. I mean, very important. And I covered this very much in detail and when it comes to my coaching sessions. You guys have to have at least one or two charting platforms that are the same as the ones that I'm showing. If you're trying to put the same parameters, same stuff on some sort of different platform, I can almost guarantee you it will not look the same. I am not saying that the platforms that I use are the best, but if you want to really see the magic of a lot of these charts and why they do what they do, it's happened more often than not. That's the reason why you guys are listening to me right now, is the fact that you have to have some of the free ones. TradingView, I found over the last couple of months, fantastic. Very clean, very transparent, can be seen and really be acted on. Very profitable for me. I'm using the free version, by the way, because I don't need the real-time data. I get that from my other platforms. Then Thinkorswim, extremely powerful. Thinkorswim is a much harder platform to read because it is truly like a Ferrari of charting platforms. You get a lot of stuff on it. I don't even use 1/8 of or 1/10 of, I should say, of the indicators that's in there. I mean, this is real rocket science stuff, but I don't need rocket science as long as I'm flying to wherever I'm going. Okay, so I just pick and choose on the ones and I experiment with some of the others. Like for example, a few months ago, I introduced the Darvas box. That's this box. Okay, I didn't create that. Mr. Darvas did. It's helped me a lot in figuring out where I stand on a certain day, on a certain week, looking at it, keeping a broader perspective in the market, helping me manage, keeping me in my trades, things like that. Because that's a fundamental mistake that all of us do, right? Which is not managing our own trades because of managing. And I'm not saying I'm blaming people. I can't even blame myself sometimes. But we get scared. We sell. We have like 200-point down days. We're like, oh my God, now the system's broken and all that kind of stuff. So I try to focus on the details and the technicals much more forcibly than I ever did in my life. A technical discipline is not something you learn in one day. It is something that you develop over time. I can walk you. I have put so many powerful charts out there just in the last couple of weeks alone. Forget about since I started my service and in 2000 April 15, 2014. Forget about the fact that I have hundreds, thousands of charts on StockTwits from 2011 when I started, just doing it for fun. Actionable, big money charts Question is that just walking you through a chart and showing you this, so what? If you don't act on it, the regret of not taking the trade, short or long, I can teach you that. So when people come to you and say, oh, I didn't, so I just laugh because there are so many actionable charts. I'm not saying that you have to act on every one of them. People don't, not everyone has the capacity to act on every one of the single ideas. That's fine. But there are so many charts that are just fantastic. Look at Amazon. Look at Netflix. Look at Priceline. I wasn't even trading Priceline for the last 2 weeks. And then I got in there and it went up how many points? Scott knows that because Scott's a Priceline addict. Okay? 48 points? Did I plan it? No. I looked at the thing. It looked great. Bang. So that's another key point that a lot of you guys have to realize, especially the guys who don't know my style, is there's an old saying in the business. The ultimate compliment is when somebody thanks you after the trade is done. You know what that means? That means they never did the trade and they're saying, great job on it. What a pathetic compliment, because I would like you to be in the trade and make money alongside it instead of thanking me for something that I did, because I do enough good trades for me to mitigate the losing ones. So that's what I'm getting at. So is it the mental part? Got to work on it. And there's enough material out there for from the behavioral game theory aspect, from the macroeconomic global aspect of showing, trying to teach people how global macroeconomics works and how you have to think outside the box. Over time, it'll fall in, and everyone has their cognitive bias. They either hate something, they hate the Fed, and they hate this, and they hate that. Hate's not going to make you money. Every time Janet Yellen does something, you get these. I'm joking around because KG is a good friend of mine. He puts this stupid ass, excuse my French, picture of Ian McGregor, or the English guy, with that thing here. I hate it. It's so stupid because you know what that means? Either he's not involved in what he's doing, not him, maybe some other people too. It's just a joke. To me, this business is not a joke. I have a very good lifestyle. I gotta provide for people. My family, my dogs, my cats, the charities we give to. So please, let's get straight into this right now. So here's a channel, and this, I used to call it the acceleration channel. Okay, that started off in 2011, actually October, right there. Okay, and that was the channel that we were traveling in. It's a wide band, mind you. Lower end of the band, around 2040. This is E-mini, so add like 5 or 6 points to it to get to the S&P. And on the upper end, around 2278. We're not there yet, or 2300 almost, 2290. So we fell out of that. We had this big drop. All of a sudden, the big bear market talk started to come into action. We're going into a significant bear market. I don't know. All I know is that I have provided some very important metrics and inflection points that I look at based on my theory. And we're going to talk about the Fed, what they did today, in about 10 minutes time or 5 minutes time. One second. So this was the lows of last October. I always use that as a reference point. And we almost got there, give or take, right there. And I'm sure everyone can see that. That was last October. All right, and this was major action. This was a similar type of action, bigger, okay, from here, except it happened faster. This took 1, 2, 3, 4 weeks. This took literally 1 week. 1 week. And then the second week. And then a reversal candle. And this is where we are. People who are candlestick experts, and I'm just a sort of intermediate candlestick kind of guy, okay, this is looking okay. I am neither uber bullish, and I'm certainly not dogmatically bearish. You guys know that. So at this point, I am looking at around 2045 or 2040. So that's around 2045 or so, which is The back test, and I've said this many times, so this is just a repeat of what I keep on talking about. A back test of the 50-week moving average going back to 2009, and this line here, and this line here, this orange line. Let me just do it from last October. Keep things in perspective. Okay. So this was last October. This was a huge move. People who have not taken the sessions with me, I'd like to point out and explain this very clearly. This move was tremendous. A $10,000 S&P investment here would have been $200,000 here. And I am not kidding. And I'm not kidding. Okay? Did I do it? Absolutely not. I staggered my way up. I still caught the bunch of it. And I left this part, and I'd left early. I always do that, because I'm not going to be the last one holding the bag. How do I know I was going to hold the bag? This could have gone higher, but then you had this correction. So staggering up on a weekly basis looks beautiful, right? Wow, I could just buy this, But on a daily, hourly basis that we all tend to focus in, like we used to say in the business in the old days, right? Everyone thinks long term and acts like a frisky teenager, like as if everything's falling apart in the short term. That's what all of you guys do. I do too sometimes, and it's really stupid. It's really stupid. Everyone's like, oh yeah, I'm a pretty long-term investor. I want to invest in this. And then every time the market's like down, quick thing, they're not even looking at the longer term charts. That's the reason why I'm showing this. They're like, oh my God, it's all over. Yes, yeah. And then you hit the idiots on TV, telling us everything's going to hell in a handbasket. America's finished. So anyway, so this is the weekly chart to put things in perspective. It cuts out all the noise, right? But here's the problem that no one talks about. This is in hindsight. We're seeing this after the deed is done. So how do you know this is going to happen? Well, we try to read the tea leaves as much as possible through my technical indicators, my expertise, my knowledge about the markets, blah, blah, blah. So that's the best you can get. Because in hindsight, if everyone could trade, everyone would be a frigging billionaire. End of story. So this is where we are right now. These candles that you're seeing here are large, are large. This is a volatility. This looks like an inverted hammer. Not good, right? It's a green inverted hammer. You got to look to see where it landed. It landed at the bottom of the Darvis. It landed towards the bottom of this acceleration band. These gray lines are acceleration bands. You know what acceleration means? I'm sure some of you are into cars. We certainly are. Okay. And I'll tell you one thing. You know what a launch control is? Guys, anyone know what a launch control is? While I wipe my glasses. Does anyone know what a launch control is? Hold on one second. Sorry, I had to wipe my reading glasses. Does anyone know what a launch control is, please? DW obviously the first one to answer. No, you're wrong. When you press the gas, it goes. Secret Batman button. You're almost close. Anyone got like serious high performance cars? Well, nowadays I have it in some basic cars too. My Benz does this. Okay. All right. Here's what launch control is. Okay. Launch control is actually a button they put out there. You can manually do it. Okay. My kid's like a master at that. But it's a button. So you have that in the Porsches, you have that in the Ferraris, you have it in the high-end Bimmers. You have a lot of cars now. So launch control is when you basically hit that button and then you sit back and you got to do a couple of other maneuvers before it goes. All right. So that's it. So this business is about launch control. At certain times, you have to know when to accelerate. Okay? At certain times, you have to know when to accelerate. I believe this is one of the times. Let me get straight into the Fed right now. What the Fed did today is enormous. Yes, there's going to be short-term volatility. No question about it. Okay? And I'll show you where I think the levels are going to be. But going forward, going towards the end of the year, we have removed a significant amount of uncertainty as what the Fed's going to do. Remember one thing I learned about this business from years ago, and about life too. It doesn't matter what the action is. If you know where if you can remove the uncertainty, you can react to it. So as traders and investors, and major uncertainty has been removed, which is they're not raising rates in September. Maybe they'll do it in October, maybe they'll do it in November. I'll tell you why they didn't do it. And I did mention this before. I did think that they should have done it, but what do I know? Okay? But the fact is, all the central bankers around the world talked to each other, and the Fed said it is a risk they do not want to take because the effect on the emerging markets right now would have been hard, painful. Notice one thing, how over the last couple of days, not just our markets, but especially the overseas markets like China and Thailand and Vietnam and Korea, Germany too. It's not an emerging market, but still, they were rallying like, forget it. I was going to say the New York term, all right? Big time. China, boom, up 5%. When was it, last night? Okay. Of course, it's a manipulated market, but that's okay. The fact is that they knew because they felt that the Fed wasn't going to take that risk. It doesn't mean we're not going to rate hike. We're going, the market can raise rates on its own without the Fed doing anything. So let's not even go there. The fact is that we kept things on an even keel. The fear that they're going to start raising rates and do it and speed up would kill the nascent and the powerful U.S. housing market, which is a pillar of the global economy. Believe it or not, when Scott's buying his $10 million home out there, okay, and building it, well, he wants to make sure his mortgage rates stay low. All right, so that's just the way it is. That's why they didn't do it. They didn't want to rock the boat, and they can do it anytime. So at this point, looking at the weekly basis, we are looking, what I'm looking is that it is going to test the 2040, but not only that, my feeling is, and I've explained this very clearly to people who have taken all my sessions and in my video cast too, which I put out there, is this pattern is going to get completed. I am a master at pattern symmetry. That's one thing I'm going to go head to head with anybody. People who have known me, they know that. How patterns recreate themselves and equal and opposite reaction, don't ask me. That's a law of nature. So at this point, even if we, let's say, for example, have a red week next week or so, sometime by early October, and I still think we're going to see some real shenanigans by the middle of October. That's when we get the other pullback. Is it going to be a pullback down here to the 1800s? I don't think so. And if we do break 1800, you can feel free to stay short for a bunch of months because that is going to be deadly. That means the trend is broken. But let's not sit there and try to game that because we know the pain and suffering of the UVXY, right? All right, there you go. So bottom line is that this particular pattern is going to get repeated. And in between, there's going to be some severe volatility.
No.
But the volatility should be contained at the 1900 level. Somebody's talking in the back. Can they just mute the microphone? I'll leave open a couple of minutes for questions and stuff after this. So that's a weekly chart. So I want to show you the picture. Oh, the other thing that I wanted to show on the weekly, which is very important, is this. Forget this. Weeks of just green bars, nice. Okay, look at this. Stochastics say things which just are millions of messages and thousands of dollars that we can make. The stochastic showed that this was October low right there. We got there. When you go to minus, when you go to like 0.3, simply it's like the relative strength, right? 20.3. I mean, come on, gotta buy blindly. That's what I did actually during the flash crash. I bought blindly. I didn't know what my coats were going to be. Yeah, I did sell pretty fast too, but still. So this is key. And revisiting that again is an unlikely event for at least, in my opinion, for the next 30 to 60 days. Just letting you guys know. Can happen. Anything can happen. Revisiting this is possible. Is it possible that we pull back and then retest the bottom of the 1900s? That's roughly about 500 points from where we are down. Yes, it is possible. So that's a given. All right. So that's number one. That's a positive. It's moving up. I use the stochastics to help me keep my mind sane and my trades intact on an hourly, daily basis. The stochastics have just been, and I try to show it to you guys all the time. For people who want to learn, they're focused, they know I keep on showing positive divergences. Well, guess what? Those were the positive divergences that got played out over the last couple of days. So regardless of overbought conditions and having a couple of hedges on the short side and stuff, which didn't work out, okay, the longs were enormous. But you have to be selective, of course. So saying all that, look at this here. This does not look like we're going in a bear market. Okay, look at this. Once we get up here, those are severe overbought conditions. At that point, don't want to keep on going long. I'll be honest with you. That's the reason why I didn't go heavy long yesterday. I did some strategic, sorry, not yesterday, over the last couple of days. I wasn't pushing. I was doing tactical trades. Amazon's here, Netflix is there, and this and that, but not just saying it. Go out there and buy like 100 S&P calls and garbage like that, because we are on a 1 hour basis very overbought. That's something I'm going to cover in the next 5 minutes. Why do you think we just pulled back today? For fun? Because the indicators needed to get reset. Why do indicators need to get reset? Does anyone know? Why do you think that happens? Is it just a term the technicians use to sound smart? Can anyone chime in and just tell me? What's this oversold, overbought indicator resets? What does it exactly mean in money terms? Like, show me the bling, man. Okay, so somebody tell me, what do you think it is? Because I want you guys to understand this. If you don't understand it, then you're truly lost.
Sorry, Clue, we're having dinner. I would answer, but I'm just listening.
Okay, not a problem. Who's this?
Scott.
Hey, Scotty. So
Right,
basically, indicator resets and stuff is simply that, listen, somebody's writing a put or a call to sell it to you, right? So they want some of their money back. Why do you think when everybody's skewed and shoved in one corner, like, for example, extreme number of retail shorts over the last couple of weeks, I even posted that article a few times, we have huge cash levels. More importantly, we have everybody crowding into, oh my God, the market's going to fall apart when the Fed comes out. The algos and the HFT are in the business of destroying large clusters of, and these are guys who do options and stuff. VIPS knows, understands that a lot too. Okay. They're there to demolish it. That's why yesterday, right, they just systematically demolished everything. And then right when the shorts completely gave up after we were up 160 points, bang, they bring it down. Technical indicators resets are simply a function of money management or trading desk management, if you want to put it this way. In the old days, there used to be market makers, the bandits on Wall Street, they called themselves bandits, who used to take a half, 50 cents on a stock or this and that every time you bought a share. Total highway robbery. Nowadays, they have electronic systems that scalp for 0.0001 cents, right? In nanoseconds. So there you go. So it is a function of that. So those are standard procedure, but the overall trend, is something that you have to monitor. So the 1 hour thing that I'm going to dive in right now. So this is good. This is still looking like an inverse head and shoulder. Doesn't it look like an inverse head and shoulder? It totally looks like. Here you have a head, you have a left shoulder, you have a right shoulder. Now it's moving up. Here's the neckline, and over the neckline, we get overbought. And at that point, you do not want to get excited. You want to be selling or trimming your positions, period. Now, let's look at something a little closer to home. So this is good. Now, another thing I want to go before I depart from this weekly chart to make you guys realize why I do what I do. The highways that we travel in are known as moving averages. You can put a dozen of them out there. I don't care. I use the 34 and the 50. For extreme versions, you have to use the 100 and the 200 day, right? The yellow line is actually, sorry, this is 34 and this is the 34 right there, and the 50. These are the highways we travel on. What happens when you hit launch control and you don't know what the heck to drive that Ferrari, and you literally fall off, not the cliff, thank God. Let's say you just completely drive off the road. Well, this is what happens. And then you have a technical mean reversion. You revert, you want to get back on the road that you're traveling in. That's the reason why, in simplest terms, and I've done this so many times, it's almost automatic, okay? But somehow or the other, they're going to come back and retest the highway. Whether it goes above it and then veers off the highway again, like that happens here, and then you have a correction. But mean reversion is key. Now, here is something that I noticed, and I'm going to go back a little bit and show this something simple for all of you people. Is, one second, that when we do this line, the yellow line and the red line, the main highways, the conduits that the market prices track, and you can, there's so many other ways to track it, right? VWAPs and you name it, is the fact that they haven't even curved down. Once you start to see these highways start to do this, that's when you know we are at the onset of a nice multi-month bear market. Now, they don't happen right away. You will see these curving maybe 2 weeks down the road. During the crash of 2008 and 9, it was after a month or two the technical started to show major deterioration. So I don't know whether this is going to happen. And for this to happen, where there's major highway of the 34 and the 50-day moving averages starting to curve down, the first signs, okay, this is on a weekly charts, mind you. I'm showing you the bigger picture. We have to monitor it. And when that happens, what's the next story? It keeps on bouncing at this downward sloping. It's happening on the daily, by the way, right now. Excuse me. The downward sloping 50, 34 moving average and failing. That's how bear markets are done. Okay? Zigzag, zigzag, keeps on hitting, can't keep it. So let's take a look at the daily. Here you have the daily of, I'm going to put the SPX up there. October 15, 2014, big move, big correction. This was mid-December. All you heard on TV, Santa's gone. He's finished. He's joined ISIS. I mean, come on, all kinds of idiotic things that you ever heard of in your life, right? And then Santa appeared with a vengeance on 12/16, 12/17, and look at this rally. And that started off the volatility cycle, right? In between bands. So this is it. Are we going to repeat what happened last October and get back to the highs? I have no idea. I have no idea. It can happen. It cannot happen. I don't know. I'm not even going to go there. All I know is this is what we did today. And this is the reason why you guys are listening to me for free. All right, it's busting your chops. Here's the deal here, guys, okay? And nothing to be alarmed about. It's not doomed yet. This is your uptrend line I keep on showing on the daily from the lows, right? Right there. Anyone can do this. Just draw a line. Fix this line a little bit, try to touch some nice points. Every line should touch about 2 or 3 points, so this is nice and even. Everyone see that? Okay, somebody's asking, DW is asking, what is the bottom reading called? It's called the stochastic fast and the McClellan oscillator, right at the bottom. Make out the bottom one, McClellan oscillator. Okay, so here we are. Look at this line here. And this is just one of the charts we're looking at. I have like 7 of the same things I'm looking at to get a different view. I show you trading view. I share like 2 or 3 with you guys all the time. So what is this line? It's a 34-day downward sloping 34-day moving average. Because that's what we did. We hit that hard. We went above it and we got rejection. This happened for many different reasons. I'm not going to get into that. That's another hour story. Sign up for the sessions. I'll explain everything to you guys, okay? We have quadruple witching tomorrow. One of the functions of this move back, which I think is very healthy, is quadruple witching. I didn't want the market to just continue and hit 2040. Then we have nowhere to go. Now you have a chance to do some buying. You have a chance to do some buying even if we pull back to 1978, or pull back to 1966. That's about 180 more points down. Or worst case scenario, we pull back down to 1940, which is the retest of this broken downtrend line that broke out on 9/15, which nobody expected. So we kept on going and we hit the 34. And the minute you hit one of the downward sloping major averages, you got this reversal candle. It's not necessarily good. It's nothing that bad. So we'll have to monitor to see what happens in between. My thought is that we did the first retest here. We're going to do a second retest. And I believe we are still going to go and try to re-engage the 50-day moving average at around 2040. Right there, the red line. Is it possible? Wildly impossible, right? That's what people think. Is it possible that this pattern symmetry, after we pull back a little bit, gets completed to 2100? Absolutely possible. I'm telling you right now. This was unprecedented. This was sovereign wealth funds, big hedge funds blowing up. Constant, massive, just liquidations, margin calls, all kinds of stuff. Remember one thing, the retail investor is not in the game. The mom and pop does not buy individual stocks anymore. And the few who do, they're a rare breed. They go through the mutual funds, they have their 401ks. Traders like us, we do this, we love it. But even a lot of traders are basically, oh, we're going to wait and see what happens. The famous lads and the biggest bullshit words I've ever heard in the business. I'll wait to see what happens. Yeah, wait to see what happens. So what happens? You get this massive crash and you say, oh, well, I'll wait to see what happens. Oh, yeah, I missed it. That's what you hear all the time, right? I'm not saying I'm not guilty of that at times, but I'm saying this is laughable. Oh, yeah, the next one. Oh, yeah, doesn't work like that in life. Engage. This is full-scale battle. Engage. So the bottom line is this is another line here, which is the ascending triangle that I've shown many times. And at this point, we are back, slightly back in the middle of the ascending triangle. We broke out of there, tested the Fibonacci level of 61.8% retracement. This is the Fibonacci from the top to the bottom. And I believe that once we test, this is a rising 5-day moving average. See that yellow line? I use the 5-day because it gives me because there are 5 days in the trading week. So this is a good one to monitor on a nice, powerful trend, up or down. When this was moving down, every time the market got to the 5-day, it slipped. So I'm just opening eyes to things that that I have learned over the years. So a 5-day down, it would be in 1976. So let's another 14 S&P points. Nothing to cry about. We don't want this trend that we are seeing. Sorry, let me get this out. We don't want this trend that we are seeing, this yellow line, the 5-day, to go like that. Then we're in trouble. That means you got to go short, and we are most probably going to visit the 1900 level again. So these lines are not that hard. And there are technicians out there who are so smart, so many of them on StockTwit. I mean, some of them, the charts are so complicated, I can't even frigging read it. And a lot of them are so wrong that I just say, okay, thank you. But I learn. Because from what I have seen, the majority of people out there are extremely bearish. And every single time you get a little hiccup, you get super uber bearish. Well, good luck. That's just the way I guess they want to be. They're all self-loathing Americans. That's great. Why don't you go live in a different country? My famous last words. People don't like hearing that. I didn't say a different country, but let's say, some other countries. And I've traveled extensively, and believe me, I know. It's garbage out there. Even the best countries in the world are very difficult to maneuver in. So we got the best house in a bad neighborhood. All right, just remember that. So bottom line is this: we want that, we want this level to hold. It's pretty clear. Now, the other thing that happens, which I want to explain this to everyone very quickly, is you do get these big volatility candles in the middle of an uptrend. We got this. Oops, sorry. We got this. Whoa, hold on one second. I need to get the. Okay, got it. Bang, bang. I, I don't know why I'm not getting the lines. Okay, for some reason I can't get the marker. So we got this one. Oh, maybe this is why. Oops. Bear with me 1 second. Can everyone still see this stuff? Daily. Okay. I'm trying to get this marker, but I can't seem to get it aside from this screen. Okay. I can't get the marker. So you get this big pullbacks in the middle of an uptrend.
So
Okay.
we don't see your chart.
I'm sorry?
We don't see your chart. I think we are only seeing the welcome screen. I think we don't see your chart.
Oh, okay. I don't know what happened here. Okay, how about now? Yeah, now
It's
you
good
can.
now.
Okay, thank you for reminding that. At what point couldn't you see my chart? Okay.
I think just when you're grabbing the pen,
Oh, yes. When I was grabbing the pen, I turned the screen off. Yes.
just few seconds ago.
Yeah, thank you for mentioning that. That's real important. Yeah, I'm sorry. It was the thing, the screen button is right on top of that. So what I'm getting at is in between an uptrend, you get these big volatility candles. We have a lot of fake outs. Algos are designed to fake out. They've faked me out so many times, I won't even go there. Well, far less than what it does to other people, but still. So here we have this. Okay, another one. We get a small one here, and we got one today. So what difference is it between this and this big one? Nothing. Because when you look at the picture of what happened today, and this would have bothered me, okay, this is when I would have said, okay, this is still a inside day. It's a reversal candle, which net is not good. But you have to take the other externals into picture: quadruple witching, Fed day, all kinds of stuff going on, you know. So you got that. And if we had closed, I just want to show this very clearly, if we had closed below 1975, that would have been a bearish engulfing, right? If it had taken over the top and the bottom of yesterday, we'll see you later. At that point, we would have dropped rather rapidly towards the 1940 level again. But given where we stood, and again, these days volatility candles and technical patterns change rather rapidly because we all know, because the machines change the structure. So traditional technical analysts, I keep saying traditional technical analysts, can get a grip on what's going on. Okay, so the point is that this one is okay for now. Yes, we could come down and drop another 14 or 13 S&P points. I would like it to hold the 50% retracement level right here, and that's my job to point all that stuff out and move from there. I still think that we grab and retest the 2040 level on that picture. Looking at the hourly chart, which is a picture of what happens, on an hourly basis, the best way to do it is to, let's take a look at this. So this is really what happened today this is an hourly chart, okay, on TradingView. If you really look at it, does it look really scary? I don't know. Maybe in 5 days from now, you're like, Frank, you're an idiot. It was very scary. Well, I'm not going to be sitting around 5 days from now with my eyes closed. I will certainly inform everybody what to do. So the bottom line is that at this point, a retest of this uptrend line that started on the flash crash day, August 24th, is pretty big. Okay, it's pretty big. So this would be nice. A perfect scenario that we all like to see. Doesn't always happen like that. Is a test of the 50 and the 34. Remember, we moved away rather fast. So the standard deviation between here and the moving averages was probably around like maybe 1.5. One thing I'd like to remind everyone: when we broke down completely, the standard deviation from this negative crossover to down to here, okay, was almost 7. -7 standard deviation. How far you moved away from the highways. It's like that. What was that movie when the guys go to Vegas and it's like a bachelor party thing? I forget the name, right? Just like you're in the middle of the desert, you don't know what the hell's going on. Well, this is it. Well, this is standard stuff. So a mean reversion would bring us down to what's maybe the 197, 198 level, and we'd like it to basically do that and then make a move up here. It allows us to cost average down and do what we need to do. Okay? You want to play this little pullback, fine, but remember you have to be quick. This Bollinger wants to pop up, not down. Bollinger study is also another thing you have to basically train your eyes to do. A retest of the broken downtrend line at 194, that is a low probability, but still a probability trade, all right, to fall like this and then move from here. So TradingView is brilliant at that. In the meantime, this stochastic reset on the hourly, which I was harping about since yesterday or so, and you know how the markets do it, they keep on squeezing it and just like, oh, these guys are waiting for the stochastic reset. We're not going to make that happen, right? Then it is in the process of happening right now. So that's it. That's your spies. Now, keep in mind, I'm not going into individual stocks right now. The point is that the market overall is okay. The macro picture, I mean, the fundamental global picture is that the Fed did what they need to do. You're going to see the standard Fed haters come out and say, Rick Santelli was almost having, he was almost killing that plastic water bottle he was holding. Yeah, he was losing it. I feel really bad for that Poland Springs water or something, But the point is that hating Janet Yellen and whatever, you know what? We're not central bankers. 99.999% of traders don't even know basic economics. So what are they doing trying to figure out what monetary economics is all about? All they think is the Fed's printing money. Technically speaking, they're not even printing money, but I won't even get into that right now. I am a hardcore capitalist. I'm a Republican. I am not a Keynesian, and I'm not a Democrat. I do not believe in free money. I believe in working hard and making a shitload of money. Okay? So on top of that, I respect what the central banks have done, because without them, we would be toast right now. I was there during the crisis in Wall Street. I know what happened. Dick Fuld, the head of Lehman, went and joined the firm, I'm not going to name, which was 3 doors down from where we were. And he sat there for 4 years. And then he came out in public just in the last couple of weeks. If somebody follows the financial news, they know that. Okay, his mansion for whatever 50 million is on list, out there. So what I'm saying is that it's just the way it is. So when traders try to, no, comments are fine, but when they try to dissect and try to basically be the head of the next central bank in their own bedroom, I laugh, because they don't even know what the global dynamics are. There's a lot of stuff going on. All I know is generally the bull market is not over. Is not over. The bull markets are generally die when the swamp is drained. You know what that means? I don't mean the huge water puddle in your backyard. I'm talking about when the Fed tries completely start to drain the liquidity out. Hardcore interest rate hikes. After the first 3 or 4 hikes, that's when the recession starts. Because at that point, corporate profits get hit. Also, saying all that, there's a lot of problems in the world, and we have our own. That's it. So I will be more than happy to answer 1 or 2 questions. But after that, it's 6 o'clock. I'll wrap up and I will tell you guys. If you do want to learn the reality of how this business works and then how to manage your trades and do it. Remember, I'm not here to teach you how to put your trades together. I will not do that because that's not my business. I will give you a basic idea on it. I will put some terrific forecasts. I'll put some great trades out there. After that, you manage your own trades. So if you want a timing service, please join. I won't even, like the names just are on my tip of my tongue. I won't even say it. Go join them. If you want to learn the realities of how this great business works, then feel free to stay with Clueless Safe Trading. And that's all I got to say. So saying all that, does anyone have any quick questions that I can answer? And I will tell you, please, for the pittance of the money that I put out there, okay? And I'm telling you guys, because it makes my life so much simpler. I'll tell you that. Take the group coaching sessions. I have it on Saturday mornings. I have it on Sunday evenings at times. and then the single sessions, I have it during the week a couple of times. I'll tell you. If that doesn't benefit you and make my life easier, but more than that, benefit you for a few bucks, I don't understand why people don't do it. So I'll leave them to their own. But when people ask me completely stupid, insane questions about the charts and they haven't made any effort to really understand them after the free video cast, after not taking the group sessions, then I have nothing to say but say, you know, what can I say? I still answer those questions. And I'm not a person with too much patience. I'll tell you that right now. I am a born trader. So the fact that I have so much patience with so many people, it's great. And I love the fact that you guys are supporting this venture. So let me answer any questions that you guys want to have. Just type it in and I'll answer that right away. No questions? Okay. All right. Very good. So in that case, what I am going to do is wrap up and look forward to seeing you guys tomorrow. And I will, you know, I hope this was helpful to everyone. And I'll put this up on the video channel. Please take the video channel link, the Clueless 8, and send it to all your friends. We want a lot more good people in here, and thank you for everything. God bless America.